Good evening, everyone. Anthony, Wall Street Trader, 8:14 p.m. Eastern Standard Time, December 28, 2021. It's not financial advice. It's educational. Subscribe, share the video, click the thumbs up. We're here to talk about the greatness of the graph. Not the greatness of Bitcoin, but Bitcoin's going to turn the corner. Anyway, let's talk about graph. All right. We did hit, man, we were just about to melt up here, 77 cents. And clearly, macro events can't exactly tell when they're happening. This one we could have. And we're going to go into why I think Bitcoin really took a topsy-turvy dive. I think this week there's a clear indicator, to me at least, I think that we're seeing in terms of why we see this downward pressure in the last week of the year. Hint, taxes. We're going to talk about that. Right now, we do have a resistance area right now at 77 cents. Almost crossed it multiple times. Starting to look like possible inverted head and shoulders, which could work us back up to 88. But in the meantime, we are still struggling here all the way down to 67 cents. We do have an area of support right around here, roughly around 64 cents. That would be a really interesting place to be buying some more graph, let me tell you. But in the meantime, zooming out a bit more, we are still in the spaceship that we drew, and we are still filling it out. But in the meantime, let's go over to graph relative to Bitcoin, and this bad boy is still resistance way down here at 1338, probably 4% or so. So 4% on the graph would take us down probably to 62 cents or so. I'm not worried about that because if you're in it for the long term, you should be pretty comfortable with it. I think this is a good spot to potentially be dollar cost, or what I would call value cost averaging, more than dollar cost averaging into the trade. Now, a couple of things. We have support down here at 1340, resistance up here at 1483. Again, this is sort of hard to tell. There's no real trend line here on the short term to really get a good feel for where this thing's going. But what I can tell you is Bitcoin seems to be the leader right now, and we do have to kind of take pause and look at the big boy in the room. And unfortunately, this is what we're looking at. Here's the broadening wedge. We talked about a breakout. We have broken out of the broadening wedge. Now, you might wonder, why are we back in it? Well, a couple of reasons why. A lot of people kind of scratch their head about this. Well, some people consider the period of time between November 8th and now to be shorter term than longer term. And I tend to agree with that from time to time. Normally, technicians will leave log on, because they're typically dealing with the longer term trends. If I took the logarithmic scale off, you're not really going to notice a difference right now. However, if you pull the turquoise line back, now that I have the logarithmic scale off, and I make sure I fit it to touch these lines up here, this price action up here, to make sure that it lines up with the correct resistance, as you can see, it is not dipping into the broadening wedge. Now, the logarithmic scale is really meant for really more long-term price action, but it really doesn't matter here. It's the same thing. We see the same pattern. We see, generally speaking, the same trend line. So generally speaking, it's a harmless tool to flip between log. Now, if you're looking for a very long period of time, then it does not make sense to not. It doesn't make sense to. It makes all the sense in the world to use a logarithmic scale. Anyway, neither here nor there. Main point right now is we have a good resistance area of 46,700. We are at 47,916 right now. And I think some people are calling for maybe a fast wick down to 44 and then a bounce. I personally don't think that's going to happen. Now, there are a couple of reasons why there's a couple of reasons out there why Bitcoin may have went down that much. One, which everyone's talking about, which is the fact that rich people are apparently pulling their money out of Bitcoin because they believe that the Fed is able to stave off inflation. Now, I highly doubt that because it takes a long time for inflation to subside. The Fed isn't just going to do that with snapping their fingers. It's hard to stop a runaway train. So most rich people, I would imagine, get the joke and are probably not selling Bitcoin. What I would also say is, for point number 2, is I think the real reason that people aren't really talking about is the fact that this is the last week in the year. Crypto tax rules are generally going to be stiffer. From year to year, they get stiffer and stiffer and stiffer. Just generally speaking, tax code in the equities market, same thing. So what'll happen is at the last part of the year, in favor of not having to liquidate next year, where they're going to pay way more on a percentage basis on their gains, they'll liquidate this year. And then they'll pick it up again at the start of next year. They'd rather pay taxes on the gains that they've made and reset it this year rather than do it next year where they have to pay more percentages on that same gain. So again, to make a long story short, this week the sell-off is really driven by astute rich people or their astute accountants in terms of making sure they optimize their tax situation. And that's what's going on this week. It's not because they don't want to be in Bitcoin. They will be back in Bitcoin. They probably have to sell it, wait 30 days, and then they can buy back into it, or 20 days. I forget what the period of time is, but I think that's exactly what's happening here. Anyway, that's all I've got right now, but Bitcoin dominance is going sideways. I think Bitcoin's going to start turning the corner either towards the end of this week or into January. I'm expecting a massive, massive run up soon. Anyway, I'll keep you all posted. Graph at 67 cents. This might be a great point to buy. If it does come down to 64, I think it's a great time to buy. Anyway, talk soon. Bye.